It's a good question. I think there may be some reaction, but I think the bottom line is, and we've heard this a lot today at the conference, that whoever takes the top spot or the vice chair, the reality is the Fed is a committee, and you'll end up converging on what the committee is thinking, even if you have one voice at the top. And at the moment, there's a rule, and the Fed is still, the dot plots are still higher than what the market's expecting. That convergence is what really we're going to see going forward. We still think the Fed are going to hike twice next year. There could be risks of more if we see tax reform or strong tax cuts, but at the moment we think that's still going to be the case, whoever is in the Fed chair and vice chair.
So how are you positioned given the tax cut uncertainty? Do you expect that we will get full-blown tax reform, and then will that be the catalyst to move the dollar higher, given the fact that the Fed will undoubtedly respond?
Well, if it is the case, and certainly it's by no means clear-cut, there's obviously a lot of debate on, and I think the easiest thing to pass would be tax cuts rather than tax reform. Tax reform is obviously riddled.
Right.
It's been something that's been discussed for years and years and never really got anywhere. If we only see, and I say only, but if we see tax cuts, that could drive the dollar higher, at least from a short-term perspective. However, for the dollar really to sustain gains over a longer period of time, you would need to see substantial tax reforms. And that, at the moment, is still the more difficult thing to achieve.
And how does that play out into your view here in Asia? Because the fear is that if we got closer to 3% on the U.S. 10-year, let's say, then you would see some meaningful outflows here. But doesn't seem to be your assumption. No,
well, look, we don't think Treasury yields are going to get to 3%. We're still thinking that we're going to stay around this 2.4%-ish and range around here. But you're right. I mean, of course, if you do see a much more aggressive Fed, for instance, that could result in bigger outflows from the region. But bearing in mind that Asia fundamentally looks a lot better, reserves in the region are a lot higher than they were, and the reality is that a lot of these capital flows have been more sustainable, current account positions are better. So what I'm trying to say here is that even if you do see some shock, it may not be as negative for the region and regional markets as would have been the case some time back. I'm not going to say it's not going to happen, but if a big risk event, for instance, happens, then you could see some outflows.